studying your last two. I swim med tea when they turned in. The styren down to mute. And can learn the pole that sunk he died.
One of the most common mistakes made by beginners is assuming that T4 preparation is simply a matter of printing forms from payroll software. Professional payroll administration works differently. Before any T4 slips are prepared, payroll records must first be reconciled and verified. That is the central lesson of this slide. On the left side, we see the payroll records. These records contain the detailed payroll information accumulated throughout the year. This includes gross pay, tax withholdings, CPP contributions, payroll registers, and employee payroll reports. These numbers form the foundation of year-end payroll reporting. However, payroll records alone are not enough. Before relying on those numbers, they must be reviewed and compared against other records. That is where the reconciliation process begins. In the center of the slide, we see the reconciliation process itself. Think of reconciliation as a verification exercise. The objective is to determine whether the payroll records and accounting records agree with each other. The first step is comparing balances. Payroll reports should be compared against accounting records to ensure that amounts have been recorded correctly. Next comes verification of deductions, tax withholdings, CPP contributions, and other payroll deductions should be reviewed to ensure that they were calculated and recorded properly. The process also includes checking remittances. Amounts withheld from employees are generally required to be remitted to CRA. Professionals review these remittances to ensure that obligations have been met and that records support the amounts reported. Finally, year-end totals are reviewed. The goal is to ensure that all payroll information is complete, accurate, and internally consistent before reporting begins. Now look at the right side of the slide. These are the accounting records. This includes the general ledger, trial balance, payroll liability accounts, and other accounting reports. These records represent how payroll transactions were recorded within the accounting system. A key objective of reconciliation is making sure that payroll records and accounting records tell the same story. If payroll reports show one number and accounting records show another, a difference exists that must be investigated. Professional practitioners do not simply ignore these differences. They identify them, understand them, and resolve them before preparing year-end reporting. Notice the message at the bottom of the slide. Accurate T4 slips begin with accurate payroll records. That statement summarizes the entire reconciliation process. A T4 slip is only as accurate as the information used to prepare it. If payroll records contain errors, those errors can eventually appear on T4 slips. If payroll accounts have not been reconciled, reporting inaccuracies may occur. This is why experienced practitioners always reconcile before reporting. The reconciliation process provides confidence that the numbers are complete, accurate, and reliable. The key lesson from this slide is simple. Do not prepare T4 slips first and reconcile later. Reconcile first. Verify the numbers. Confirm the records. Resolve any differences. Then prepare the T4 slips. That disciplined process helps ensure accurate reporting, reduces corrections, and creates a much smoother year-end payroll administration experience. This slide presents the practical step-by-step process that professionals follow when reconciling payroll accounts before preparing T4 slips. For beginners, it is important to understand that reconciliation is not a single task. It is a sequence of review procedures designed to confirm that payroll information is complete, accurate, and ready for reporting. Let's walk through the process from beginning to end. The first step is gathering payroll reports. Before any review can begin, all relevant payroll information must be collected. This may include payroll registers, employee earnings reports, year-end payroll summaries, deduction reports, and other payroll records generated throughout the year. The objective is to assemble the information that will be reviewed and verified. The second step is reviewing payroll accounts. At this stage, attention shifts to the accounting records. The practitioner reviews the general ledger, payroll liability accounts, payroll expense accounts, and related accounting balances. These records show how payroll transactions were recorded within the accounting system. The third step is comparing payroll information to accounting information. This is often the heart of the reconciliation process. Payroll reports are compared against accounting records to determine whether the balances agree. If payroll totals and accounting totals match, that is a positive sign. If differences exist, those differences must be investigated and understood. The goal is not simply to identify differences. The goal is to explain them. Next comes verification of tax and CPP amounts. Professionals review payroll deductions to ensure that tax withholdings, CPP contributions, and other payroll-related amounts were calculated and recorded correctly. These amounts are especially important because they directly affect both CRA reporting and employee reporting. The fifth step is confirming remittances. Payroll deductions create remittance obligations, and practitioners need to verify that those remittances were actually made. This review may involve examining CRA payment records, bank confirmations, remittance schedules, and supporting documentation. The objective is to ensure that the amounts withheld from employees were properly remitted to CRA. The sixth and final step is resolving differences. This is where the reconciliation process creates its greatest value. Any discrepancies identified during the review are investigated and corrected before reporting begins. The key principle is simple. Problems should be fixed before T4 preparation, not after. Notice how the workflow ends with reconciliation complete. Only after balances have been matched, deductions verified, remittances confirmed, and differences resolved should the reporting process move forward. That is why the message at the bottom of the slide is so important. Find and fix problems before T4 preparation begins. This philosophy separates professional payroll administration from simple form preparation. The objective is not to produce T4 slips as quickly as possible. The objective is to produce accurate T4 slips. Accurate reporting begins with accurate records, and accurate records are achieved through careful reconciliation. The key lesson from this slide is that payroll reconciliation is a systematic review process. Gather the records, review the accounts, compare the information, verify deductions, confirm remittances, resolve differences. Then, and only then, proceed to T4 preparation. Following this sequence greatly reduces reporting errors, minimizes corrections, and creates confidence that the year-end payroll information is accurate and complete. This slide demonstrates why payroll reconciliation is one of the most important steps in the year-end payroll process. The quality of your T4 slips depends directly on the quality of your payroll reconciliation. On the left side of the slide, we see what happens when payroll records have not been reconciled. The payroll reports contain differences. Balances do not agree. Deductions may be inaccurate. Some information may be missing, and year-end totals have not been fully verified. At first, these issues may seem minor, but when T4 slips are prepared using incomplete or inaccurate information, reporting problems can occur. Incorrect deductions may appear on employee slips. Payroll balances may not match accounting records. Remittances may not align with reported amounts. And in some cases, Corrections become necessary after the T4 slips have already been issued. Notice the warning signs shown throughout the left side of the slide. Missing balances, incorrect deductions, payroll differences, reporting errors, additional administrative work. These are all consequences of reporting before verification is complete. This is why the phrase at the bottom of the left side is so important. Report first, fix later. That approach creates unnecessary risk and extra work. Now let's compare that to the right side of the slide. This represents a reconciled payroll system. Before reporting begins, payroll records have been reviewed, balances have been matched, deductions have been verified, remittances have been confirmed, differences have been investigated and resolved. As a result, the payroll information is much more reliable. Notice the benefits listed on the right side. Verified payroll totals, accurate deductions, confirmed remittances, reliable T4 reporting, fewer corrections, and greater confidence in the year-end reporting process. Because the records were reconciled first, the T4 slips are based on information that has already been tested and verified. This greatly reduces the likelihood of reporting errors. In the center of the slide, we see the progression that professionals follow. Payroll reconciliation leads to accurate T4 slips. Accurate T4 slips lead to successful year-end reporting. This sequence is important because it highlights the relationship between preparation and reporting. Accurate reporting is not achieved by chance. It is achieved through verification. The comparison banner at the bottom summarizes the difference perfectly. One approach says, report first and fix later. The professional approach says, verify first and report accurately. Experienced practitioners always choose the second approach. It saves time. It reduces corrections. It improves compliance. And it creates confidence that the information being reported is accurate. That is why the final message on the slide is so important. Professional payroll reporting starts with reconciliation, not with T4 preparation, not with form printing, not with year-end filing. It starts with making sure the underlying payroll records are correct. The key lesson from this slide is simple. The most accurate T4 slips are produced when payroll records have already been reconciled, verified, and confirmed. When professionals take the time to reconcile first, reporting becomes easier, cleaner, and more reliable. And that is the foundation of successful year-end payroll administration.